I sat down with Marc Rutzen, CEO and co-founder of HelloData.ai. We had a really great conversation about AI and everything that could happen within the real estate industry in the near term with AI coming into the industry, and then also talked about the products he's building. So really great episode. Check it out.
Listen, everybody, we all know that real estate is the most proven way to build wealth. But why isn't everyone wealthy from real estate then? It's hard to know where to start, and most of the education out there is just complete trash, and you end up investing your money on a series of courses instead of in real estate. That's not how this podcast works. We give you the blueprint to successful real estate investing and bring on guests actually willing to share their secrets. I started my real estate investing journey as a freshman in college when I bought my first duplex and have been in the trenches doing deals ever since. And today, I now own hundreds of millions of dollars of investment property. On this podcast, you will learn what you actually need to know to be a successful active or passive real estate investor. And we'll offer our takes on what's happening today so you can navigate this market and build wealth. I'm Drew Breneman, and this is the Breneman Blueprint.
All right, welcome back to another episode of the Breneman Blueprint. Today I have Marc Rutzen, co-founder and CEO of HelloData.ai. Welcome, Marc.
Hey, thanks for having me.
Yeah, so Marc's worked kind of at the start of his career. He worked in real estate development, brokerage, consulting, and then actually I saw him speak at like a ULI lunch I was at when he co-founded a company called Enodo, which was a predictive analytics startup that utilized machine learning to automate the real estate investment underwriting process. I remember there were different scores for amenities and different things.
Yep.
So then that got sold to Walker and Dunlap, and he worked there for
4 years.
For 4 years? Yeah, that went by fast then. Okay, yeah, because I feel like that was 2 seconds ago when I was at that launch. Yeah, and now he's back in the startup world with HelloData, and AI is obviously top of everyone's mind these days, and Chat GPT. So wanna have Marc on and pick his brain, see what he's up to now. So welcome.
Absolutely.
Cool. Yeah. Well, yeah. I think I had mentioned you got started in real estate initially, because when we had first talked, I thought you were like a computer science.
No, actually real estate background. Yeah, So I started off in a company called Madison Construction, which launched a development branch called Three Corners. So my background, my educational background, I got my Master of Science in Real Estate Development from Columbia. I'm a managing broker. I don't use the managing broker license very much these days in the tech side, but I do still have it. So I worked in development at Three Corners, and we did a master plan community development in Moline. We did a federally qualified health center and a few neighborhood stabilization programs where I was kind of involved, soup to nuts, the whole process. In doing that, and then in working at a couple other companies subsequently, I saw in every aspect of real estate, it was really manual, really inefficient, and very, very speculative, right? People would speculate, I think this drove rents higher, or I think this is going to happen. And I was actually doing the manual work of like going to the assessor websites and pulling data or manually inputting data from rent rolls. And I thought, man, I would love to build something that makes it so people don't have to do this anymore. And that was the impetus behind Enodo. So the big claim to fame for Enodo was we would ingest rent rolls and operating statements, put it alongside market data, and help you determine the value add, the best value add investments to do. So basically, we could tell you if you did the granite countertops, the hardwood floors, the roof deck, how much more rent would those actually get you? So we scaled pretty quickly, got some big names on the platform, and then Walker and Dunlop had a pilot with us. And ultimately, that turned out to an acquisition, right? So I joined W&D in 2019 as part of that acquisition, and then rose to chief product officer, building internal tech for them that ultimately shaved a lot of time off the underwriting process and made things a lot more efficient. But I kind of love the startup world, so here I am back in it.
Nice. Yeah, that's awesome. And it's because I think then the way the rent roll and everything was being ingested in Enodo, like how did that work?
Yeah, we built a series of algorithms that understood the different formats. So whether it's Yardi, RealPage, Appfolio, we looked at every different template, and some of them are pretty straightforward, and some, as you know, are very much not straightforward. But with machine learning, we were able to handle all the different edge cases, and we built it so that people could actually upload their rent roll, and if there were issues with the machine learning, like it didn't pick something up, they would see what it did pick up and have the opportunity to correct that. So that approach worked really well and enabled us to handle a lot of different rent roll templates. Ultimately, we got some feedback that it was one of the best parsers on the market, which makes sense for why W&D was interested.
Yeah, because we use a product now, Breneman Capital does, called RedIQ.
Very familiar.
So okay,
Yep.
yeah. So that's shaved a lot of time off. Where we used to, especially when you're looking at deals that are larger, you have these rent rolls are always formatted differently, and
Yep.
people putting different charges in different places, and then we want to load it up into our model.
Mm-hmm.
So yeah, we're not using AI really in the underwriting process other than the RedIQ tool.
Yeah.
But that's shaved a ton of time off to get the data organized, and then the way we've set up our model in Excel is then once we can just export the data, copy and paste it out of RedIQ, goes into our model, and then it really populates the whole rest of the model, just flows through. So there's not it knows how to look. Okay, it's got this many units, then it fills it out, and then you just adjust it for the business deal. Okay, this one we need to renovate the units. This is when the manual work starts. We need to look at the last couple deals. How much did it cost to renovate, and then enter all that in and go, unit type by unit type with the business plan. But that's saved off so much time where we used to manually be adjusting that, or here's the unit count, and
I know how that goes.
So we've saved some time for sure. I think maybe before we get into HelloData, I'd be curious, just kind of like a lot of real estate folks, like another guy I had on the podcast, he referred to like us as dumb real estate guys, like nicely. Obviously, I don't think any of us are dumb, but like it's funny, sort of the adoption of tech, or even people like looking into it, where real estate's definitely like gonna always be behind the curve for tech. And I think so if someone's listening now, they don't really know much about AI, how would you describe AI? Just kind of someone that's almost like never heard of it at this point.
Yeah, well, first I'd say there's no dumb real estate people, right? Because startups may say these real estate people, they don't adopt tech. Oh, they're so behind the times, it's so manual. But at the end of the day, they're making millions of dollars. I mean, like, let's not kid ourselves here. So I always hate when people are like, oh, real estate people, they'll never get it. Okay, they get it. It's working. They're making good money.
We get it. What's funny, the reason we joke and call ourselves that is we buy a building, let's say, and then you do a simple renovation, increase the income, and then everybody makes $2 million. Like that. That's where it's like, it's a good recipe. You don't need to be a genius to do that. You need to know quite a few things along the way, and there's a million moving pieces. But that's why you do it for 5-10 years, and you got, okay, I get the steps. I'm ready to have the potential to make a lot of money and not be inventing anything or running brain surgery practices or something.
Yeah.
Anyways,
I mean, I think to a certain extent, it's just because real estate has been so local for forever. It's very like, your market really well. But today, I mean, there's so much data available and AI available, and I'll get to the definition in a second. But there's so much tech available that now people can actually compete in other markets because they have granular enough data. I think that's only going to continue. So the adoption of technology is going to be more and more important as these tools get more advanced. But the simplest way to describe AI, so it's a machine that has the ability to perform complex cognitive operations similar to a human, like indistinguishable from a human in a lot of ways. It's not thinking, okay? It's not actually aware of itself, but it's trained on data such that it understands what the appropriate response should be based on, tons of training data flowing into it of human conversations, articles written, real estate data in our case, right? And can actually derive conclusions very much like a human would.
So then if we were to just play it out a little bit into the future, or maybe a lot into the future, what would you say, whatever it is, 10 or 20 years from now, real estate looks like now that like AI is like more injected into the industry?
Yeah, so I think the speculation will be significantly less because we'll have objective measures for what rent growth is going to look like, what risk is actual risk, and not just like, oh, I think it'll go up this much. Like you'd be able to quantify what is my potential risk of this not turning out to be a good investment. That and a lot of the manual things that we do today, they're already being automated like in crazy ways. If you've ever played with ChatGPT, like it can write real estate listing descriptions. It may have a few issues, but it's quickly improving so that it's smoothed out. I mean, one example, I put something into it. I was like recently renovated floor in the living room, and then it extrapolates to recently renovated hardwood floors throughout, right? So it still makes mistakes like that, but it's improving so rapidly that I imagine, our whole exercise of putting together an investment and an offering memo and sending that to people to get investment, and then sending it to a lender to get financing. It's all, and then the lender summarizes it on their end, and the investment committee and the potential acquirer summarizes it on their end. Why are we summarizing data back and forth forever, right? If we could all kind of look at the same data and the same outputs, I think that's where real estate's headed. So it's going to be either we realize that we don't need to convert everything to a PDF and send it to people because it's kind of pointless, or we just have AI create the OM and send it, and then we have AI read the OM and digest it, and we just do that back and forth.
And then what format would it be sent in then if it's not a PDF? How you mentioned it's somehow it's in some system or
a platform, right? Like where people work today. Back when I first started in real estate tech, there weren't a whole lot of platforms out there that had scale. There's the CoStars, the Axios of the world that were pretty big, but there weren't a ton that have scale. Now there's so many, the startups that made it through this whole time that kind of launched back in the like 2016, 17, 18 era, like some of them are pretty well scaled and people run their business on these platforms. But AI can inject insight into those processes in such a way that they don't have to go learn another interface, because I'm pretty sure the last thing people want right now is another product to learn, another interface to log into.
Yeah.
Right. We try to bring with HelloData, we try to bring the insight where they already work.
No, that's interesting. Yeah, I was on a different podcast as a guest, and he was like, an interesting thing is talking about people's tech stacks. Which 6 months ago I never heard of that term, and I went through like 8 things we have, and at a certain point I was like, I feel like this is enough. Like, I mean, in terms of like going through each one by one, like what do you like? Let's hit the most important 8, I guess, because I'll be here all day if we're gonna run through everything we're using. But then what sort of, so it would be something like, it would be a platform that then both the investor and like the purchaser, maybe the seller, they're all on, something like what are some names of those? Like a Deal Path or what?
Deal Path is big. Pro Deal also big, starting to gain more traction. So like the deal rooms like that will always kind of be a need. But what is analyzed from those documents in the deal rooms, like the fact that we have to go down into multiple folders, like if you're using Box right now, you have any sort of folder structure that's organized across the organization, and all big companies tend to have this, right? You're to find that appraisal that you did that you got a couple months ago and look at the comps. Well, you're clicking down into like 8 folders, finding it, and then you're like, oh, it wasn't actually in that folder. Now I have to go to a different deal folder and find it. It actually wastes a ton of time. And then what you're doing with the document is you're copying and pasting data out into Excel to analyze manually. Well, now technology can extract that data from the appraisal, analyze it, and tell you, hey, this is what rents will look like. This is what growth will look like when layered in with all the other data. You're not going to get that from 1 or 2 appraisals, but if you layer that information, the comps they chose, the valuation they provided, with market data, in actual deal data from other sources, it gets pretty robust in terms of the analytical capabilities. And now with ChatGPT, you could just summarize it like in plain English. It's no more a median error and real estate people kind of like trying to figure out what that means. It's like, no, in plain English, this is going to happen. If you do this, this will likely be the result with this % certainty. And everyone could wrap their heads around that.
Interesting. Yeah, I don't know if it sounds like you're um, working maybe a little more on multifamily, but I used to work at a commercial developer, and one thing that the only efficiency I saw ever was on the commercial deals, the brokerage house would have the deal already loaded up in Argus.
Mm-hmm.
So then when you start underwriting, you open the file, they already have the building, all the tenants, everything loaded in, and all the leases. So that would save you in multifamily the whole step of like organizing the data, getting entered, how many units is it, what's the square footage. But yeah, still to date, that's almost like the only efficiency
Yeah.
I've seen in terms of like the sale process.
It's still very much, I feel like real estate is still very much in the get our data organized phase.
Yeah.
And there's, get your data organized. Then there's business intelligence and charts and graphs and deriving insight. Still a human deriving insight, but with really good data that's all kind of in a cohesive format. And then there's AI and machine learning where it's actually using the data to derive insights. We're still very much in phase 1, crossing over into phase 2 a little bit. But real estate data is very disorganized, as you know. I'm sure you've been to many assessors' websites, many recorders' websites. They're all different.
Right.
It's just a function of how the industry works.
Yeah, and then even we're super organized, and everyone gives us like a kudos, like, oh, this is nice in terms of how we organize our stuff to sell a building or to apply for a loan. But it's funny, even we'll be buying a building and not everyone's using Box or Dropbox. I mean, sometimes we're getting stuff just emailed one by one to us.
A lot of times, yeah.
Or you send it to a lender. I mean, half the lenders are like, oh, we can't use Dropbox, can't use Box. It's not. You need to use our like secure thing. And so then you have this nice file structure you made to share with your lender, the folders, and it doesn't matter. You gotta still, So there's still a lot of getting the data organized and sharing phase to flush out, especially when you start involving the banks and whatnot.
I know firsthand. We built a system at W&D to handle document processing in that way, and we got the same pushback. Like, hey, no, I have my way of doing it. So like, everyone has their own way, but with AI, it's starting to make the processes. It kind of doesn't matter what your chart of accounts is or what your document format is anymore, because the algorithms will take that data, analyze it, and give you the outputs in the way the lender wants to see it.
Nice. Yeah, and then you can teach it that and get it. Okay, nice. Yeah, that that would be exciting. That would save a lot of steps.
It's coming.
So yeah, so then what's HelloData doing? I know you have 3 or 4 different products. I mean, maybe if you want to talk about the company or however you want to start, but just I think probably easiest go product by product. But
high level. So Tim and Nico, who are my co-founders in HelloData, were actually my first 2 hires at Enodo back in the day. And we're kind of obsessed with quantifying the drivers of real estate value using AI and machine learning to tell you, yes, the granite countertops will get you this much. Yes, being in this market or this neighborhood versus this neighborhood has this much of a premium in this particular city, right? That sort of thing we just love back in the day with Enodo, and we still love it. We still want to do it. We found in the Enodo days, focusing on the acquisition side is all well and good, but it's only relevant when there is an acquisition, right? And especially today, deal volumes are a lot lower. There's an ongoing need closer to the operation. And we've seen this, we built a revenue management product and we test with a few clients, and we got to see what the process is for revenue management today. Well, they sit in a meeting every week and they look at the outputs of their revenue management software, whether it's ours or someone else's. And they speculate, oh, I think this drove price, or I think we should do this with the units. I think these units are never going to sell at that price. There's no way we're going to be able to get that rent. Even though YieldStar, LRO, or one of the major softwares is telling them, you got people that, although well-intentioned, they're not data scientists, and they're sitting around questioning those results and kind of speculating as to the right strategy. So we kind of realized that that's something that since everyone's going through and since everyone is trying to figure out the best path forward in many different aspects of real estate, HelloData is focused on providing that insight at the operating level. So not only what your pricing should be, because that's one lever, right, in the equation, but how should your, like, is your lender or is your resident experience deeply flawed? Like, your property website is really hard to navigate, and you're losing money because people can't get through the door. Okay, well, that's something that even if you adjust price, you're not going to solve unless you can identify that as an issue. Or you're charging fees that are very different from your competition, your closest comps in the market, and you're leaving money on the table. Or your operating expenses. You're not actually benchmarking against your closest comps, and you think you're doing well, but you're actually not doing so well, and you could reduce expenses quite significantly by switching vendors here and there. These are the types of insights that we want to provide, and what we're trying to do is high level take data from that the lenders have access to and take data that the owners have access to and find a way to look at it all cohesively and give insights to both groups. That's kind of the high level goal. And in terms of the products, I mean, we can probably cover them one by one and talk about what they do.
Yeah, sounds good. I think on the one where you're evaluating the website.
Mm-hmm.
So how would that work in terms of, like, some of this I can envision, obviously, how rents could get set where you're pulling that data, but how would you guys be evaluating a website? I'd be curious, what's the method or metrics?
So the language on the website is one, right? Are you highlighting the right aspects of the property based on what's going on in the market? So if you know that X, Y, and Z property websites are highlighting this and they're getting less time on market and higher rents than you, and not offering as much in the way of concessions, okay, we can isolate that as a variable and say, no, you need to change the way you're describing your property. If the photos are of poor quality, you're not highlighting the right things. Like, we can identify that. We have a photo extraction algorithm called Quality Score that can actually extract the quality and condition of photos and tell you if it's a good photo or a bad photo on top of that. Or if, just very simply, your SEO is poor because your website takes forever to load. Right, like there's built-in tools to identify that, or I shouldn't say built-in. We're building it into our tools, but there are tools out there, third-party software, to analyze how fast your website loads, how SEO optimized it is. So that's a simple thing. The more complex stuff is like, where are my expenses relative to the market, and how should I go about improving that? Or, for example, what software products? And we're not quite to the point where we can answer this, but we anticipate we'll be able to answer it in the future. What software products are your closest comps using, and what ROI is that providing them? Because there's so much out there that it's very difficult to tell what should I adopt. I've got 16 options for this product. What should I adopt that's going to give me the highest ROI?
What's interesting, it's going to be tough to figure out the fees like that everyone's charging, because a lot of times, like, we're doing the same thing. We're looking at comps, and you don't really, a lot of the times at these places, know what the, like, utility package or pet rent, or maybe they have the pet rent on the website, but some of these things, where they have these extra charges, you don't know till you walk the property and you're actually touring. They give you a sheet of paper that has all, like, a breakdown of how it works.
Yeah.
And then some places they have tax on top of the rent, like that's like the city or charges tax. So then, like, that, some people are quoting it with the tax, some without. Like, it's not yeah, so that's interesting. That'll be tough to parse out, but that's I get the problem, because we do that all the time. Like, I own deals in 3 different markets, and soon to be 5, where I just moved to Texas, as you know. But yeah, so that, you go to Phoenix, let's say, where we are, and then they're doing one thing for security deposits and fees, and in Chicago it's totally different, and in Minnesota it's totally different.
Yep.
And I'd assume when we buy something in Austin or Dallas, it's going to be different again, in terms of how, not wildly different where we don't understand it, but one, like in Chicago, if, let's say, you have a rent concession, everyone markets the net effective rent. So the rent when you factor in the concession.
Mm-hmm.
In Phoenix, they don't do that. They just want to see what they pay, and then they read, oh, there's a 1 month free or $500 signing bonus. Like that will be then deducted from the whatever the $1,200 in rent I'm looking at.
Yeah.
So then you don't want to be the only person in the market advertising the rent differently. Obviously, people come in and be surprised. So I get the need for the product. That'll be great if you guys can make that. I mean, that's something we would definitely use. So
yeah, well, we have a lot of components of it, and then that sets me up to talk about the different products that we have. So
and we have a photo analyzer too.
Oh yeah.
No, I'm just kidding. It's me complaining to everybody that these photos suck, basically. Where I don't know, my dad taught me a bit about photography, so I'm always the one hounding everybody about like shoot the picture lower and stop running it through these filters that look like garbage, like just so anyways, I having nice photos really helps. So I think that would be a cool thing too, because then we could run our deals through it and be like, if it's, let's say, 0 to 100 is a score, we can't use any photos that are below 90 score. Like that's our process. And so we optimize our website, and you got a photo on here that's a 62 score, get rid of it, take a new picture of the pool or whatever. Maybe start with RentSource, or what do you think?
So RentSource, so basically what we're doing with that product, we're going to all the kind of major listing sites across the country, a lot of individual property websites as well, and we're aggregating data on the rents, the time on market, the fees that they charge, the concessions, which we use NLP to pick the effective rent from the concessions. Basically process the text. If it's like you get a $100 Starbucks gift card and first month off if you sign a 13-month lease, well, now AI can actually go through that and determine, oh, okay, here's your effective rent from that.
Yeah, but in some markets, though, they're not like, this is where this is so tricky.
Market differences, for sure.
You have to learn that. Maybe. Which that'll be manual figuring out, but then once you figure out what they're doing.
Yeah.
Anyways,
once we figure out the market differences, I think it will be hugely impactful, because then what we're basically trying to do there, so we have all this data that's coming in every day. We want to allow you to benchmark your performance against your closest comps and see, what should I do? How should my strategy and positioning change based on what my closest comps are doing? And some insights that we can derive there. I mean, because we see average time on market, what the rent was as it was advertised, what the fees they're charging are, we could actually tell which property managers are getting the highest performance just by looking at top of the line. Like, are there units on the market for a very short time and then they go off? And look at like all their properties across the market and see, oh, this property manager objectively achieves better performance than these other property managers, right? So a lot of times improving performance is just a matter of changing your vendors, and property management is kind of a big vendor. So that's some analytics that we can provide with the data right now. But the goal, ultimately, I mentioned the photo extraction algorithm that we call quality score. That assesses the condition, quality, and attributes of real estate at a distance from photos. Our goal is to combine those two, basically make it so you can programmatically find the worst house on the best block. Like, use the data on everything that's going on in the market, everything that's comparable, and use the data on the physical attributes of the property. Like, we're looking at street views, we're looking at interior photos, exterior photos. It's the algorithm is doing this, right? But if we can distill that into a score, you could say, hey, this property on this block is earning lower rents than all the other properties in that area, and the physical condition of it on the exterior, it's overgrown grass, it's got graffiti, bars on the windows, all sorts of issues that looking at it for a second you would be able to tell, but you can't look at every property in every market. So if we combine these two, which we're working on now, we think we can help identify value add opportunities at scale, at least direct people in the right area. We can't guarantee people will sell, but there are data sets that we can start to leverage that can get us closer to determining if someone's actually going to sell or not.
Okay. And so just to unpack all this, and then I guess in terms of what's available today Is all this stuff still being developed, or is there any things people can sign up for and use right now from HelloData? Or
yes, RentSource is available today, so you can sign up and subscribe. Basically, it's a weekly email that has data on all the properties that you want to track in a particular market, your competition. You can put them in, and then every Monday at 8 a.m. it'll send, here's what happened at those properties, here's their updated rents, here's the fees that they're charging, that sort of thing. It's all in just one well-packaged email. And the LiquidRent product, which is our revenue management software, that's available today too. And we're aiming to be the most transparent revenue management software on the market. So right now it'll tell you, here's the predicted price. It's because this number of prospects normally comes in, and that converts to this many applicants, and that converts to this many leases. And if you put the price higher or lower, here's what that funnel is going to look like. So we're trying to make it as transparent as possible. And next, we're going to be adding in the ability to, like, in human words, describe why you should do this or this. Right now, it's charts and graphs, but we want to humanize it using AI.
That's interesting. So RentSource, that's sending you information on your competing properties, just sent automatically. I mean, that's nice because everyone thinks, okay, I'll go look Monday, see what people are charging, and then they get busy. Yep. Where this is all scraped and pulled from the internet and everywhere you can go, sent to you. Then LiquidRent, I mean, where are you usually? That's giving you pricing recommendations on what you should charge. Because YieldStar and I think LRO or like that. We haven't used any of those, but I know on many larger deals, like everyone is using those. And I thought they were just sort of letting the application run their pricing. Some of these.
We've heard, it's like 60 to 80% of the time they accept the recommendations, right? A lot of the time they aren't. They're applying their judgment. And part of the problem with that market, not singling out any individual provider, but like there are a lot of levers to pull. You almost need to learn how the revenue management software is supposed to work. And I've talked with people that did that as their full-time job. They're asset managers who are kind of tweaking the levers and assumptions. Why do we have to do that?
Yeah.
It kind of doesn't make sense. You shouldn't have to learn how to tweak the assumptions that should be provided for you with the tech that's available today. So that's kind of our philosophy. We want to be transparent, not a black box model where you don't know what's going to happen and you still have to pull the levers and make the adjustments. These are the inputs. This is why they're the inputs, and this is the outputs, and this is what's going to happen if you use those outputs.
Yeah, makes sense. And one gap in the market, I'm not sure if you guys are planning on trying to fill this void, is so like I own buildings from 5 units to 96 units, I think is the biggest unit count. And some of those deals are pretty big, 25, 33 million bucks. Like they're not small deals. And I would think most of the housing stock in the country is like in that range that I own. I don't know the percentage, but I'd imagine there's a huge percentage of the multifamily units are in 5 to whatever below 100 unit buildings. And there's no one using pricing software in that size, where you have to be connected more or less to one of the bigger expensive accounting options. And then if you own an 8 unit, you're not doing that.
Right.
And so I think this would be something where if it's simple to use, it's not where I need to enter in these assumptions, and this one has a balcony, this one has a whatever doggy doors and to the patio and all this stuff, where it's easier to use, almost kind of how like you have your RentSource, where it's like it's just an email you look at, like everyone knows how to look at an email at this point, where if you're able to make it easy to use and then somehow also dip into that like smaller building space, like that would be a huge product potentially, because like I have 20 plus buildings I'd be interested in using that on, but I'm not connected to the 2 biggest accounting options, which then doesn't really work together. We're using AppFolio for most of our like deal level accounting. Some of the management companies we use, they do have Yardi or are using real page for accounting, but it's like then you're going to rely on them to set the algorithm, and I'd rather be setting the price, just basically doing what RentSource is manually is like our process right now.
Yeah. So below like 100 units, you really can't use pure supply and demand. And maybe it's not exactly 100 units. It kind of depends on the market. If you're more suburban and there's not a whole lot of comps, you need more units to get that supply and demand. In the city, with software like YieldStar and LRO, they have other data flowing in from other properties. Our approach to it and how we want to serve that market under the 100 unit range. So it's kind of like a spectrum. When you get to the smaller properties, it's more comps driven. And when you get to the bigger properties, it makes more sense to go supply and demand driven. So what we want to do is blend the models so that when you get to the smaller units, it's finding the best possible comps to infuse the algorithm and give you pricing. It doesn't have to give you the data on the comps and make you analyze it. It could actually spit out the right price based on your closest comps. And those closest comps are taking into account all the data that we collect on them, including the visuals of the properties from the street views and the interiors if we have photos on them. So it's like how a human being would look at determining comps. And that would drive the algorithm at the lower end. And then up at the upper end, it's more purely supply and demand, because you have like a 500 unit property. Every floor plan has enough traffic to do a supply and demand calculation.
Yeah, that makes sense. And actually, your answer reminded me of the main reason we never adopted these is like the rents at adopted any of the pricing software is because all the comps being fed into the current options are the nicer, bigger buildings. And, if you own an 8 unit around the corner, I mean, if it's Chicago prices, maybe the 2-bedroom in that building using YieldStar is charging $4,300 for a 2-bed at this point.
Mm-hmm.
And we're around the corner at $3,100 or $3,000. So it's not, I don't want to, so I just assumed, I never even tried it. You sign up for YieldStar, it's going to tell us we should start charging $4,000 when I've already tried charging $3,200, couldn't get it, let's say, hypothetically.
Yeah. So
that actually was the main reason, not that we thought we wouldn't, that, and then, some of who, depending who we're using, if you're using Appfolio, which we've really liked, there wasn't an option, I don't think, to connect any of that. Then it was too manual. So RentSource and LiquidRent, and then the quality score that's coming.
Yeah. No, quality score exists. It's just not really usable for real estate people on its own. We kind of built all of these as APIs first and started off selling them to real estate tech companies, other prop tech companies that can offer them as an add-on for their clients. So like,
and actually, you want to explain an API? I mean, I know it's like you connect to it, but I'm sure many people are like, wait, API?
Yeah, application programming interface. Basically, it sends data from one system to another. It's an organized format to send data from one system to another. And so an API, I would send it data, right? If I have like X, Y, and Z attributes about my property, and there's an API that does this, I can send data to it, and then it will say, oh, here's your analytics on that property, right? Here's how it compares to the market, or here's, the potential to improve it, whatever it may be. In quality score, you're sending the URLs to photos, the link to the photo, send it to the API, and it will return the score for each of those photos in a composite for the building.
Interesting. Yeah, and then you can combine that then with the RentSource to say like, hey, here's an opportunity. They're charging rents that are below what they should. The exterior looks like it's in need of a refresh.
Exactly.
This is a value add opportunity. That's a really interesting product. And I think if you guys can figure out how to, that's really cool in terms of identifying off-market deals or potential opportunities at scale that like owners and brokers would definitely want to use, or buyers, I should say.
Yeah,
owners.
It's going to take some work to get it there. Because it's not just the images, and it's not just the property data. We're going to need to probably layer on some other data to make that. We need like school district ratings, we need crime ratings, demographics. We don't have that stuff yet, but once we do, we think we could get, because of the visual analysis aspect of it, we think we could get to the best value add sourcing platform. And then it's like from there, we need to solve the problem of, will they actually sell? And that's a whole other ball game. First, it'll be get the value add identification and tee it up so it's easy for people to reach out. And then it's find some way to link that to contact info so they actually can reach out. And then it's find out if those people are going to. It's a complex problem.
You should keep going, because actually when we had talked for a minute yesterday, and then you maybe go all the way until the LOI thing you told me. So this is what what it might be like in far out in the future.
Yeah, so if you can identify the properties that have poor condition and lower rents than their immediate surroundings, and you know that those markets are going to be performing well or are already performing well, okay, then you can identify value add deals. If you can layer in the information on who the contact is, okay, then you have someone to reach out to. If you can layer in the information on when their loan term ends, and what their strategy has been, and this part's complex because you need to look at a lot of different transactions and get a lot of historical data. But if you see they're in disposition mode, or you see something recently changed, like the father died and left the properties to the son, and they're gonna potentially sell. Those are events where it's more likely that they'll sell. It's a few key events, like the loan coming to term, change of hands of the property within the family, and their strategy being to exit particular markets. Okay, you can use that data to determine their probability of being receptive to an offer. And then if you can tee up using just ChatGPT or OpenAI's API, an automated LOI, right? Then you could say, here are the opportunities. Here's how likely they are to actually respond positively if I reach out. Here's the contact info, and here's a canned email for you to reach out with a LOI teed up. Like, hypothetically, that is all possible. It's a lot of problems to solve, and we might not solve all of them ourselves. We may stick to kind of the value add identification, maybe getting into some probability of sale, but it's a problem that if solved, allows the identification of value add deals, both single family rental and multifamily at scale across the country, which is super exciting.
Yeah, that would be. And then even for submitting the offers or LOIs, you could have that really more be like a template that's provided by the client, not the client is in the acquirer of the property, person making the offer. You don't need ChatGPT to write a new contract every time. Even for our deals, we have an LOI template, and more or less it's just we're just typing in the address, the number, like this. We're just updating basic stuff where actually an Appfolio does a great job of this with leases. We have a lease template, and then it's got these merge fields that get pulled in from their application. So let's say they apply, they type in their name and their address and their phone number and all this stuff. It then takes that from their application and puts that on the blanks that is needed in the lease. So you just literally press like one button, like send lease or generate lease. I haven't clicked the button. I'm not sure what it says, but that's what I'm told when we signed up.
I tend to gravitate toward like more complex tech. Just because I love it, right?
But the contract, they should make their own, and then you're clicking a button. You guys would need to get it to the point where you've tracked down the emails, or a phone number and send a text or something. But yeah, that is that would be exciting. We've actually made sort of a our own version of almost all that stuff you're talking about, where we have our template, and then we have a thing we've called our location score that we developed, where pulls in all the demographic and so like in population information by zip code from the census, all job growth data, just home prices, and then the rate. We calculate the rate of change on all these, and then it scores it from just how many standard deviations it is from the average. So it could be positive or negative. But when we make this map, it was really accurate. It was like for Chicago, it's picking up Logan Square is accelerating, and then Lincoln Park is already nice. And then we have always taken this to other markets. We've looked at it ourselves when we've driven the market. We've shown it to locals, and they're all like, this is really accurate. Maybe I think this one spot has a good school. So maybe I think that's a little better than what your map has, but there's almost no changes. And then two, when we were looking at when we've looked at rent comps for deals we've been acquiring, we've been running linear regressions with the data we're pulling on the comps. And then oftentimes you'll see like, hey, what's this building at the bottom basically charging below market rents?
Mm-hmm.
Let's give those guys a call.
Yeah.
And so like this isn't at scale at all. This is like a guy. Well, actually, the location score thing is now automatic at this point, where we have a deal database where every deal we underwrite, we click a button in our model, and then it sends this data feed tape out to a separate database Excel file we have. And when that happens, it pulls the address and does a location score.
That's awesome.
So yeah, where we've done a lot of cool stuff, and that's helped us so much. And so this, like, the sky's the limit with this stuff. So it's exciting to hear. But in terms of how we've, like for the linear regression on the rents, that's us putting in like 6 deals we think are comps for something we're looking at.
Yeah.
So it's not being done at scale. But I did think like, hey, somebody could go through and do every submarket in like a metro area and go, hey, these are like the 10 buildings that are doing the worst based on our linear regressions. Let's see what's up with those.
Yeah.
You could combine that, with the photos, and that'd be an interesting thing.
You guys are way ahead of the curve on that. I mean, most people aren't doing analytics like that. It's still very much gut driven. Some groups have figured it out and do similar things. I've heard different scoring models like that, mostly from institutional players like that are doing like 300 to 500 unit properties, and they're big acquisitions. You guys applying it in slightly smaller properties. I mean, you're clearly making a killing with it. So
yeah, well, that's where some of these folks came from, those big companies, and they just got sick of working there, basically. Yeah. So, but nice. Well, yeah, let's leave it there then, Mark. I think so. How can people want to learn more about you or HelloData? Where should they go?
So our website is HelloData, all one word, .ai, HelloData.ai. And if you want to reach out to me, it's Marc, MARC, at HelloData.ai.
Awesome. Thanks for joining us.
Absolutely. Thanks for having me.
If you learned something from today's show, leave a review and hit that subscribe button wherever you enjoy your podcast. Dive deeper into real estate investing on Breneman Capital's website, Breneman.com, where we have numerous free resources and information that can help both active and passive real estate investors. Accredited investors can get started today as a passive investor in our multifamily investment opportunities by hitting the Invest Now button on our website.
The views and opinions expressed in this podcast are those of Drew Breneman and guests as of the date of recording and do not purport to reflect the views or opinions of Breneman Capital LLC and its subsidiaries. Views and opinions are provided for informational purposes only and should not be relied upon or deemed as investment or tax advice or an offer to buy or sell securities. The speaker cannot be held responsible for any direct or incidental loss incurred by applying any of the information offered.